Hello everyone, George DeSantis here. It's Monday, August 12th, middle of the day, and as you know, I was traveling last week and didn't get to do the look at the market on Friday. But I thought I would do something today, especially given the volatility we're seeing recently. And so let's take a look at some stuff and see what we can find. Before we do that, let's look at the disclaimer. Make sure you take a look at it, read it. It says I'm not a licensed professional investment advisor. As you know, I'm a psychologist. I do this for my own purposes and share it on YouTube. If you care to look at it, you do so. Not an attempt to give professional advice. So let's begin with a weekly chart of the S&P 500. So here's a weekly chart, the one we usually look at. Weekly chart of the S&P 500. Just so we get a view of the general market, 500 stocks, blah, blah, blah. So what do we have here? Well, I like to look at the moving averages first, as you know. So this is the 4 exponential moving average. In this case, it would be a 4-week exponential moving average. That's crossed below the 9-week exponential moving average. So we had the beginning of a downtrend, and we can see that the 9 is above the 30 still. 9 is above the 30 weighted moving average. So there's weakness here showing up in this chart for a number of reasons. First of all, we had this big bearish candle, which was a bearish engulfing candle. Body of this candle totally engulfs this bullish candle. So that was a bearish engulfing candle. That signaled the beginning of a turnaround, of a downtrend. And then we had the parabolic dot moving to be positioned above that candle, and subsequently the two successive candles after that. So those are really bearish indications. The fact that parabolic is above the most recent bar, the fact that 4 crossed below the 9. And on the other hand, we still have support here at the 30, it seems. And more than that, we have support at the Fibonacci retracement level, 618. Notice that 2 weeks ago, the market came, or last week actually, market came down and hit this support level here, right? The 50-week moving average in this case, and also just slightly below the 618 level, 61.8 retracement level. And then we had a bit of a hammer, indicating that we are likely to hammer out a bottom from here. So far this week, we have this candle here, which is a bit of a doji, and uncertainty. Now, if you listen to the news, we've got all kinds of things going on in China, and Hong Kong, and we have things going on with the tariffs, etc. But all we're doing here is looking at charts. We're not considering the news items. Of course, these things play a role. In any case, let's take a look at some other indications here. We go down to MACD. MACD histogram, we saw that big bearish divergence here. And since then, we've been in bearish territory below the 0 line. So that continues to play out on the weekly chart anyway. RSI 12 is particularly effective on the weekly chart, and it remains above 40%. So this provides a glimmer of hope that we may not see much more of a destruction of this market, or downtrend if you wish. In addition to that, we have Williams percentile. It's staying above the -50 magenta line, and unless it crosses below, perhaps we will find some support here. So it looks as though we're struggling to find some support at the 50-week moving average, which is coincident with the Fibonacci 618 retracement level. That's the story on the weekly chart. Let's look at the daily chart. On this daily chart of the S&P 500, I still have the Fibonacci retracements plotted here. And what you can see is that once we began this move down, when the 4 crossed below the 9, the 4-day moving average, exponential moving average, crossed below the 9, the red line, and then the 9 crossed below the 30 right here, then we had this big drop. Now, how far did we go? We went down almost exactly to the 618 retracement level, Fibonacci retracement level. Actually, we made a low below it, but we closed just at that level. Subsequently, we had a bullish harami, which means that this bar, the body of this bar, this candle, was totally engulfed by this. Then we were followed by another bullish candle, and we hit some resistance here the following day. So we hit some resistance here. I think this must have been Thursday. We had a bullish candle, but we hit resistance. Now that was followed by another bullish harami. And today, so far, we have this bearish candle. So we're finding some resistance at the 50-day moving average and the 9 exponential moving average. That's where we stand on the daily chart. On the daily chart, we are in bearish territory with MACD histogram, but we seem to be trending up a bit here, which is encouraging from a bullish standpoint. If we go down to RSI 12, RSI 12 is still above that 40% line. Well, actually, no, correction. Correction on the daily chart, RSI 12 crossed below the 40% line, that yellow line. So it's situated below the 40% line, but it's most effective on the weekly chart. It really tells us whether we're in an uptrend or not. And we saw that we're still in an uptrend on the weekly chart. Now, Williams percentile crossed below that critical minus 50 line on the daily chart. You can see it crossed below here, and that's when this drop occurred, right here. Well, about this point here, right? We started to come down. And now we're below it again. We came back below it again. On the most slightly bullish side, we have parabolic now below the most recent bars, last 3 bars. So it seems to me we're in this no man's land here, and the question becomes, where the heck do we go from here? I'm thinking, I mentioned some time ago that we are likely to come down to one of these Fibonacci retracement levels, rally up, and then test that level again. Well, we came all the way down to 618 retracement, and we appear to be wanting to test that level again. It doesn't have to. We could rally up from here again, but today we're having a pullback of about 250 points or something. Actually, now as I speak, it's 273 points on the Dow. That is down on the Dow, and on the S&P, I'm not sure where it is. Because I'm not getting those numbers right now on my television. In any case, let me look at some other charts with you. So here's another weekly chart, but it's on a chart that has the Ichimoku cloud. Now, I've shown you this some time ago. What I am curious about here and interested in is to note that Ichimoku cloud is anticipating an uptrend into the end of the year. This is going into the year 2020. Okay, it's anticipating that. Right now, if we look at the daily chart, we are in the cloud. Let me bring it down earlier. We are in the cloud here on the daily chart, just struggling to stay above it. So that's a daily chart, and it looks as though then we can anticipate an uptrend here as soon as we find some support, and if we continue to find some support at the 618 level. Now, turning to some of the charts at stockcharts.com, here's a chart we've looked at before, a very interesting chart. It's the new high, new low index. It's a 5-day average of the new high, new low index. And so notice that back in June, this thing dropped all the way down here to a minus 1,000 in terms of the difference between number of new highs and new lows. And remember back then, Alex sent me anyway, an email saying, check this level here, this minus 400 level. As soon as we break that level to the upside, this market is going to rally again and rally nicely. And that's what happened. Now we're back below that minus 400 level, and it's ticking up. So we need to watch that minus 400 level on the new high, new low index. Don't get too bullish, in other words, until we break that level. Alex believes it's one of the best leading indicators of the market. Let's look at a different chart. Here is the percentage of stocks on the S&P 100 above their 200-day average. You can see that this broke down below the 50-day moving average of the percentage of stocks above their 200-day average, and it's now at 64. Typically between 55 and 65, one can do some trading, but I'm not buying anything. I have some stocks and ETFs, but I'm not adding anything now. I have a lot of cash too, waiting for that move on the new high, new low index and other indications in order to buy. Take a look at, let's see, this is the same on the weekly chart. So we can see we're in that critical level there. Here's the chart from Best Choice with the S&P. Since we're trying to make some sense of this market, what you can see here too is that the S&P was very oversold. It still is quite oversold, very oversold. It's now at an extreme level of what we call an extreme level of 13. This is a 10% level, this is 50, and this is 90. So we're very oversold. Hopefully we'll move from here, and the move should be up. Taking a look at Shaken now, we have the Spider, which is as you know, the ETF of the S&P, and you can see how oversold it is. It's actually very oversold. So we need to find some support here, and I think we're probably going to do so in the near future, very soon. We have a few minutes left, so I could show you a few individual stocks. This is a list that as I mentioned before, I either own at the current time or intend to keep it on my watch list so as a possible buying situation. In any case, Accenture is one. You can see it's very oversold here. And if we put up the checklist, you'll see that it has all green here. All green is good for buying. It's oversold, it's strong on all these other things. Let me go quickly through these. iPay, you don't get the checklist because it's an ETF, but you can see it's come down to hit that 200-day, approximately 200-day moving average, very oversold and ticking up from that level. So I still have that. Microsoft, which I still own, you can see it's in that oversold level now. Microsoft will give you the checklist of those important factors. So yes, it's lost some money flow here, but it's still very bullish, in fact. Look at Synopsys, which is another good one that I own, but it's lost a lot of its momentum here. Now it's oversold and ticking up. So good one. I'm still holding that. PSA, I don't have this. I don't own this, but I put it on my watch list. Let's see what else. How about CDNS, Cadence Design? That one has really got beat up recently, so I don't own it right now. PayPal, I sold it recently. You could see why it's not in the green anymore. I do have these what do you call it? These IPOs, but they're still they're looking okay. I mean, they're very oversold. This one and Zoom, looking oversold. You know, so I'm still holding those as speculative plays. Now we don't have much time left, so what I did was took all of those stocks that seem to meet the criteria for green on the screen here, or mostly, 90% of that, and I listed them here. You could see a list of them. You could stop the video and take a look at them right here. Okay, these are some of those. Well, I hope you had a good weekend, and I'm off to see my nephew again on tomorrow.